Oh boy, here we go again, back from break. Hope you guys had a fantastic week last week. I missed you guys, but it's back to work tonight. It feels great to be back here on our nightly newsletter. It is Monday evening. We have a big week ahead of us. We got some really nice moves on the charts today. Got some big news coming on Wednesday. And as always, I'm going to cover all my favorite trades in tonight's video to make sure you have a game plan to make some money tomorrow. Before we jump in and get this party going tonight, I'm excited just talking about it here right now. Before we get started though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed the video tonight, do me a favor as always, hit that like button. Give me a shout out in the comment section below. Thank you so much for tuning in and supporting the YouTube channel. Like I said, missed you guys last week. It's back to work. Got a big week ahead of us. Where are the best trades setting up for Tuesday? Not just any Tuesday, but the day before the FOMC announcement coming on Wednesday. Boy, everything looking pretty bullish right now, right? S&P bullish, Nasdaq is bullish, oil looking pretty bullish as it rotates up off the low. Now the S&P and Nasdaq, they've got some big weekly highs as big objectives overhead. So whenever we have those big weekly highs up overhead, we're looking for some breakouts going higher. The key to this, we're bullish right now, but the key word for tomorrow are going to be bear traps and breakouts. We'll talk a lot about trapping in bears, using stops as fuel. So we'll love to get some breakouts going higher here on the S&P and the Nasdaq. I also really like the idea of some bear traps around some key levels of support here. You will notice the S&P and the Nasdaq, although they're both pretty bullish right now, they are quite different. And so because of that, the game plan will be similar, but we'll talk about some very key differences tonight in timing the perfect entries for those bear traps and breakouts. So we'll talk a lot more about that as we go deeper into the video here this evening. Over on oil, like I said, oil looking very bullish as it rotates off of that low. Now, oil is not an overall bull market, right? It's one big difference in the S&P, the Nasdaq. Oil is an overall bear market right now. So we're definitely looking for some bear traps, but we've got some great spots up here for some reversals up around that 70. And we'll talk about if that potential rotation turns into a full-blown bullish reversal. So a lot we're going to cover on both the buy side and the sell side across all three of these markets here tonight. Now, before we jump in and talk about the individual trades that are my favorite for tomorrow, let's all make sure we get on the same page for tomorrow. Tomorrow is a Tuesday. We do have some big news tomorrow morning. The existing home sales number is pretty much the only news of the day tomorrow. But unless you've been living under a rock the past few weeks, and unless you kind of took off the last month or so, we know that everybody is really on the edge of their seat for what the FOMC will say on Wednesday afternoon. We've got some folks who think they're going to pause their rate hikes after the central bank collapse that we saw early last week. We know they're going to probably raise rates by a quarter, maybe a half percentage. Lot of questions up in the air right now as we go into Wednesday. So we know that's going to be the big news of the week, but don't go sleeping on that existing home sales number. We oftentimes see these 10 o'clock news numbers really give us some great catalysts and some great movement in our trade room. So keep that 10 o'clock time. We call the 10 o'clock shock. Keep that on your radar for tomorrow. And you better come back tomorrow night because we'll put the game plan together to make some money on FOMC Wednesday. But first though, let's get back to our charts because this is where the money is made on Tuesday. And of course, as always, I'm going to go over each one of these charts and talk about my favorite trades for tomorrow. If you like making money though, I would definitely watch all the way through to the end of this video because every trade I talk about tonight can be applied to your favorite market. So don't just watch only your favorite chart. Stick with me here throughout the whole video tonight. I'll make it worth your while. Let's go S&P, we'll go Nasdaq, and we'll go crude oil here to wrap up the first video back after quad witching break last week. First of all, these are all tick charts, guys. You can always see the time frames in the upper left-hand corner. They're always going to be tick charts. This is the 21 EMA, the exponential moving average. And don't forget, as an extra bonus for watching here tonight, I always provide some higher time frame charts. I've got some 60-minute time frames updated since the last time we saw each other a few weeks ago. If you want to see a bigger picture look at how I'm looking at the markets and give me some of the bigger picture look at this stuff, you can find all the 60-minute time frames linked up in the description of the YouTube video. So grab those. That'll give you guys more of a reference or some context in which I'm looking at these charts right now. Now, what's the most important factor on this S&P? The S&P is pretty much a bull market right now into a trading range. The buyers are trying to break free of that trading range, and they're trying to ultimately take out that 09 and a quarter, which again, like I mentioned earlier, is a really, really big number because you had that big run up, last Thursday morning, Thursday afternoon. There's a big magnet trying to drag that price up around that 09 and a quarter, because anytime we see a strong move in one direction like that, we expect the buyers in this case are looking for a retest. So we know the buyers what they want to do. They want to get up into that 09 and a quarter. If they really get what they want, they'll take out this 054 and a quarter, that 54 and a quarter. And again, you'll see those levels referenced in the description. I'll give you guys those 60-minute time frames, and you can see why I say that 54 and a quarter is really kind of the dream scenario for the buyers here before the FOMC on Wednesday. So I like the idea of being a buyer on the breakouts going higher. The challenge, of course, is we don't have a lot of open space. This is where bear traps come in handy. The same trap setups we talk about in our free trading course. That's one of my favorite trades going into tomorrow. My favorite trade, though, is probably going to be, with this being a potential new range, I would love to see this thing retest the high, fake out some sellers down below this, and trap in some bears, and use one of my failure patterns that you guys are learning in the free course to basically trap in, again, bear traps once again, but trap in some sellers down below that low, using, again, overall bull momentum on the chart. Ranges, of course, act like magnets. So let's kind of unpack this a little more. That's kind of what I'm looking for here for tomorrow, but let's kind of unpack this a little bit more here on this. Now, I talked about bear traps going higher. The most important thing that you want to think about if we continue going higher here overnight, again, we know the objectives at 09 and a quarter. It's not much space overall, but we're an overall bull market. Again, you'll see this on these 60-minute time frames linked up in the description. So what you want to think about here is as we're going higher, you guys want to focus on, again, what we call trap entries, right? In this case, it's a bear trap. Traps occur just below prior swings. Think about, as we go higher, every time we get below prior swings like that, we're going to probably see more buyers coming in and trying to trap in those bears. As we make our way higher, though, we start getting higher up on the ladder, higher up on the chart. We don't want to chase after it. Now we start thinking about finding channels, and we start thinking about buying deeper pullbacks, right? Wait for those pullbacks, get underneath the 21 moving average, get those bears to come in, get them to sell short, and we can use their stops as fuel for one of those failure into pullback combinations that we talk about in the free trading course. So think of this sequence right now. In the short term, as we go higher, we're trying to take out this 09 and a quarter level. Think about getting underneath prior swings. Again, just so you guys are learning in the free trading course, we call these trap setups. The reason why traps are so important as we go higher right now is because we don't have a lot of open space. Then as we start to stretch our legs, now we begin to draw bigger channels. We don't want to buy too high. So as we start going up into that 9 and a quarter area, now we wait for that nice deep pullback. It's not a bear market, it's a bull market in this example. Hopefully the bears will read this wrong. Hopefully they'll try to sell it off the moving average, because when you're bullish and you pull back and you see bears coming off the moving average, you can literally buy right into their stop losses with, again, same stuff you guys are learning in the free trading course. We call these failure patterns. And remember, I love me some failure into pullback combinations. Just going to show you guys in the free trading course, which reminds me, I've talked a lot about the free classes so far, trap patterns, failure setups, pullback combinations. I know that most of you guys and gals are taking the free courses right now, or you've taken the free class. I know because I get those emails with all your winning trades each week. I love those, by the way. Very inspiring. Keep sending them. But if you're here for the first time right now, if you haven't taken the free trading course and learned all the entry tactics I'm talking about, I'll put a link there for you in the upper right-hand corner. Grab that link and take my free trading course, because the strategy that I teach in that video series will show you a simple trick to know exactly where the best winning trades will be each day, and I'll help make it easy to start making money by teaching you 4 of my favorite entry patterns to kickstart getting you back in the green. If you're missing the best trades each day, if you're taking too many losses, grab that link, take that free course. It's perfect for someone trying to make the jump into full-time trading. And in that free course, you'll see literally hundreds of examples of strong move higher as we're going higher, grabbing those, again, those bear traps as we're going. And then again, as we start getting too high up on the chart, we now start finding bigger channels. We don't want to buy high. We wait for those deeper pullbacks. Deep pullbacks will get underneath the moving average. We can then trap in those bears, use their stops as fuel, failure into pullback combo. And again, we have a pretty good idea at that point where the market wants to go. It'll want to make its way up to that 54 and a quarter area. We could talk more about that, obviously, tomorrow, right, in the trade room at 8 o'clock Eastern time. Now, the next setup, the second of my favorite trades for tomorrow, which you probably could say is my absolute favorite trade for tomorrow. I'd rather buy low than buy high right now. We have what's called a directional range. If you are a student of mine, or if you've taken my free trading courses before, you know that these directional ranges are very, very powerful. They act like magnets, right? Ultimately. And so whenever you have a directional range like this, the best place to make money is to go look left and find other levels of support. That could be a prior swing. It could be a trend line coming down. There's a bunch of ways in which we teach in the free trading course. But ultimately what I do is I want to get down into that support area. And really my kind of favorite way to make money in a directional range like this is wait for a pullback. Don't try to pick the bottom of the pullback. Simply wait for the bears to come in. Let them try to short this thing. Remember, it's not a bear market at all in this example, right? Ranges act like magnets. Bullish directional bias into that range. Now think about where the stops are. Okay. Remember, whenever we have a trading range, go back into that range, right? So rookie traders, inexperienced traders, they love breakouts. Trap those rookies in below the moving average and think about what their stops are. Use their stops as fuel to reverse this thing back up into that range. This is one of my favorite trades in any situation, definitely for tomorrow as well. Now, there's a couple of variations of this I want to make sure you guys are aware of, and then we'll go over the NASDAQ. The NASDAQ is similar, but quite different. I think you'll see why I say that in a moment. So, for example, sometimes what happens is sometimes that pullback we see here is really strong. If that pullback is really strong like that, you have to remember, anytime we see a strong move in one direction, well, like right now, strong move, they want to retest. Anytime we see a strong move, for example, strong move down, we have to expect that when this thing pulls back, the bears are going to give it a little more effort than they would on a relatively shallow or kind of a lame pullback, right? If they see a real strong pullback, we have to give the sellers now the benefit of the doubt, right? They're going to want to come back and retest that low. So you want to think about two basic patterns pattern setups if the pullback is really, really strong. And again, we'll navigate this tomorrow in the trade room. You want to focus on what we call the 2-try rule. It's very, very simple. I'm going to show you some examples on the NASDAQ chart in a moment. So remember, strong pullback. Now, we want to buy going back up into that trading range, but we have to respect the bears now a little bit more in this scenario. So we let them try once. We let them try twice. Again, really rope in all those bears. Think about where their stops are, and we punch it back up into those stop losses. Now, sometimes what happens is, again, we call these 2-try failures. Pretty clever, right? It's a failure pattern, but 2 tries because of the strength of that pullback. Now, guys, a lot of times what happens is they'll try once, they'll try twice, and they'll actually be successful at retesting that low. Is that a reversal? No, it's not. We'll talk about reversal in a moment. At this point, the sellers are basically doing what we anticipate they're going to do. Strong move down, they hold that pullback and they retest the low. Now, the only way this is a reversal is if they break down and keep going. At this point, this is one of the easiest ways to make some money in a bullish directional range here. I'm now going to go in. Now think about it. Professionals, experienced traders, they're selling nice and high. What happens is the rookies come in now. They're chasing after it. They're getting in too late. Think about now trapping those bears in again and using stops. We call these double bottom reversals, right? Pretty simple, right? Again, strong move down. They try a couple times. They retest. Now, trap those rookies in. These oftentimes are even more powerful because now all the sellers are getting trapped in here, and anybody with their trailing stops, right, they're buying, right, they're basically being forced to buy their way out as the market snaps back up into that trading range. So keep those on your radar. If we go lower, one more, and then we'll make the move over to the NASDAQ. Final variation. Sometimes what happens is you get these deep pullbacks, but instead of going out and getting 1, 2, and then back up, or getting a retest and then back up, sometimes what happens when there's so much bullishness, for example, in the market, sometimes we get a V bottom. And whenever a market in a V bottoms like this, right, where it kind of pops up and begins to grind back higher again, these can be really tricky because you don't want to buy too high. And I realize a lot of this has some discretion involved. A lot of this is open to interpretation. That's why we have a trade room. We get together. It's a great place to learn and trade along every morning, 8 o'clock Eastern time. So if we V bottom off that low and all of a sudden the market now begins to grind higher, what you don't want to do is go buying very high. What I'll do is I'll mark a trend line off the high. I'm going to bring it down off that low. See what I'm doing here? Now, very important. Look left, find a prior swing, and what do we always say? First test is the best test. These can be tricky. These are the most advanced parts of this, but if you stay patient and wait for that new channel, and guys, this could be a bear trap, like I'm showing right here. It could be a seller failure entry, like you guys learn in the free trading course. The bottom line, though, is if it shoots lower, and then all of a sudden now, right, it gets back above the moving average, we start to kind of grind higher. Bingo, draw that trend line off the highs, and then bring it right down to that low and hit that first test, whichever of the entry patterns you guys are learning in that free trading course. And then again, if they happen to pull it back, if they pull back to that moving average and they blast off that moving average, that, my friends, is a reversal. We'll talk more about trading that reversal tomorrow morning in our morning trade room. Unfortunately, I can't cover everything here in these videos. But now you guys know my favorite trades on the S&P as we go higher and, of course, as we go lower. Let's keep this party going, though, because we're definitely not done by any means here tonight. How about some NASDAQ? Now, you will notice right away when you go in the description of the YouTube video tonight, you will see right away the NASDAQ this is not a very good representation of the NASDAQ right now. NASDAQ had that monster run up, right? And of course, just like the S&P I said earlier, NASDAQ had that big run up, right? So we know where the buyers want to go. There's a big neon sign that says, test me, right? Get back, right? That's where the buyers want to go. There's no doubt about it, about where the buyers want. They want to go back up and take out that big high. Again, you will see on the 60-minute. So we're definitely bullish here overall, but well, I shouldn't say that's the only thing that's bullish. You'll notice right away the S&P looks a heck of a lot more bullish right in front of us, right, than the NASDAQ does. We're definitely bullish overall. The most important factor right now on the NASDAQ is very similar to what we said on the S&P. We are basically in a bull market, again, bullish, relatively bullish here right now, more bullish in the long term, into a trading range. Right? It's basically what it is. It's a pop-up. It's a range. We're now trying to break out of that range. Remember, think bear traps and pullbacks, right? Bear traps on the way up, deep pullbacks on the way down, right? Same basic idea as the S&P. The one big difference, though, is that on the S&P, we have that nice juicy range up there. The NASDAQ, it's just not as convincing. So I do like the idea of the pullback underneath the trading range, but you'll notice right away what has happened on the NASDAQ. Every time I shouldn't say every time. The one time that we broke above the high today, what happened? It got sold right off. So a lot of times what happens is we might be bullish overall, but we may not get that big push higher. One of my favorite tricks is to measure the size of that last pullback and then bring that down over here, right? I mean, really, this whole area really, right, could be a buy zone when you think about it that way on the NASDAQ. So let's cover the differences here right now that we can kind of see kind of what the big differences are. The similarities right now are pretty clear on going higher. We know where the buyers want to go. Again, think about this now. As we break through this high, if we break the high here, we start popping higher. Remember, we don't want to buy too high up here. So as we're going higher, we're looking for those simple trap setups we talk about in the free trading course. They're very easy. As we start going higher, though, now we start to worry about, okay, let's not buy too high up here. Let's wait for a deeper pullback, get more buyers roped in, right? Basically give the buyers a better reason to be buying. One of my favorite techniques is to draw a trend line off these highs, right? Bring it down around these lows. See where that 21 moving average is. A lot of times these things will pull right back to that channel low. They'll get underneath the moving average, and we can literally go in, wait for those bears to try to sell short, trap them in. When I say trap them in, literally wait for them to sell short off the moving average. Think about, as I always say, think about where their pain is, right? Use those stops, use that pain as fuel and buy into those stops. Failure into pullback combination. Again, we have a pretty good idea now of where this thing wants to go, right? The 11.25 area. So that, in a nutshell, is very similar to what we talked about on the S&P earlier. One very big difference, though, and again, I mentioned earlier that measured pullback here. Look back at the NASDAQ and look what happened every time we got that deep pullback. Both times we got that deep pullback, right? So again, deep pullback, see what happens? Bears try once, bears try twice. There's that failure going higher. Do it again. Deep pullback, not as obvious this time, but you can see it. Bears try once, bears try twice, and they punch it higher. So if history repeats itself, that is exactly what you're looking for. And again, this is one of the bigger differences between the S&P and the NASDAQ. The S&P, we can be pretty aggressive buying off that range low because we have, again, it's a directional range right now. This one, not as clear, cut and dry. So on this one, if we get lucky, we'll get that measured pullback. That'll put us in and around somewhere here, right? Now, keep in mind, guys, it could obviously keep going higher and then pull back. So what I always tell our students in our trade room is going to keep that arrow, or keep that measurement tool, whatever you use on that, keep that handy, because we may go higher and then pull back by roughly the same amount as well. But if we do get that pullback though, again, we're definitely not as bullish in this example. We just aren't as bullish as the S&P. Again, we're bullish overall, but not particularly right now. So because of that, I get that range below me, that really deep pullback on my radar. I would love to get these bears coming in, let them try a couple times, whether that be a 2-try failure like on this one, or whether it be a pullback, a retest of that low, and then the 2-try failure. And again, I like 2 tries because when you get these deep pullbacks, you got to respect the momentum, of those bears. I know we're overall bullish, but to time the best entries, you'll want to let them try twice in my experience. So 2-try failures as we go there. That's one very, very big difference. And keep in mind, this could be here. It could be, it really could be anywhere on this chart right now. It's very difficult until we see a very dramatic reversal on the Nasdaq. It's very difficult to want to be a seller, especially if we go lower here right into some of these big levels of support below. And you'll see why I say that when you go in the description of the YouTube video and see those 60-minute time frames. So bear traps are the key, but again, on the Nasdaq, deep pullbacks, 2 tries, right? 2 tries back higher. The only other variable would be like a V bottom. If they were to get a V bottom here and start running higher, it doesn't seem as likely in this situation, but hey, be ready for that possibility. That V bottom, find that new channel, grab the trap entry like I'm showing you right here. Just don't chase it as it goes higher here. Love the charts on the Nasdaq and the S&P tonight. And again, we'll cover some more detailed reversal scenarios tomorrow morning in our morning trade room. How about some oil? Finishing up right now on the oil. Now, oil is kind of an interesting chart here tonight. The 60-minute time frame, which you'll see linked up in the description of the video here tonight, is very bearish, right? We all are paying a little bit less at the gas pump this time of the month here compared to last time we saw each other. We're down around $65 a barrel right now, so we're pretty bearish overall. We do though have two real kind of important clues right now that would tell us that we can expect buyers to be trying to rotate higher. One of them is this big low from, what was that, last Wednesday, right? So we had that big run going lower last Wednesday. They, of course, pulled it back because anytime you see, look at how strong that move is. Anytime we see a strong move down like this, we expect to get a pullback and a retest of that low. They got that retest, and you'll notice now they haven't been able to keep it underneath that low. So whenever we have a situation where we have, in this case, it's a big move down, but we get that retest now, if they can't break out below that low, where do you think the buyers want to go now? Where do you think we have to go to attract in more sellers? This is an obvious one, right? It's back up to retest that high. So the fact that we're struggling here right now to make anything meaningful below that low, it's just natural now to think the buyers are going to want to rotate this thing back up to an area where we expect more sellers to be coming in, trying to sell it at a higher price. That's one big clue on oil. That's kind of telling us that even though we're bearish overall, we definitely want to be thinking about some bullish rotation here. The next big clue, of course, is this range, right? Speaking of bullish rotation, you can see what's happening, right? We had that big move down. It wasn't obvious, but you can see there's a range been brewing there back and forth. We run lower, and now if the buyers have it their way, they're going to rotate off this low, again, trying to take out that high, but ultimately trying to take out this pendulum swing. The pendulum swing area is kind of like the dream come true for the buyers right now, and I'm sure quite a few sellers would love to short that 71, 72 area area up overhead as well. You'll see again on the 60-minute time frames, you'll see this area is a very, very healthy area of prior lows, which, as you guys can imagine, right, prior lows are great areas for resistance. So there probably is some pretty good money to make buying on the way up to these levels, and then potentially looking for reversals as we come up to these levels, right? So let's kind of flesh that out here real quickly. As we go higher here, or if we can go higher here, the one variable I see is this channel. I think that's the one variable we have right now. In all reality, right, this channel could be forming here, and we may end up seeing the bears may come in and swallow this thing and run this thing right back down. How would I trade that, by the way? Not my favorite trade for tomorrow, but you got to be ready for that. You got to think that channel is certainly possible to hold there. How would you trade something like that? Well, remember, we're overall, well, I shouldn't say overall, but we're pretty bullish coming off that low. You can see how they've jumped off the moving average, right? Look at how they jumped off the moving average. This is the first time we're seeing the buyers right now get any real separation off the 21 EMA. They didn't do it there. They didn't do it there, right? You can see the difference there, right? Look at how aggressive that pop off the 21 EMA is. That's the biggest separation besides maybe like that guy right there, right? But, again, this is pretty bullish right now in the short term. What's the next problem? The next problem is we're still right at that low. So the only way you can really safely sell off the high of this channel is to basically use what we call a crown reversal pattern. It's a pretty simple pattern. It's very specific though. So we know we have some bullish momentum coming off the low, and we know we're concerned about location. We've talked about this a couple times, but now we're going to put these two theories together. Because of the momentum off the low, we now want to look for the two-try rule, right? Because of the concern of where we are, we have to go out and get a trap entry. Does that make sense? If you've been following along so far tonight, we've talked about how, we were talking about earlier being the buyer on the side of the Nasdaq. But if we have a real strong rotation, if I want to sell this, deep pullback, a lot of bullish momentum in the short term, I want to respect those buyers, right? A lot of bullish momentum going higher. So let them try once, let them try twice, and then use their stops as fuel with what I would call a two-try failure pattern. That's one piece of the puzzle, right? It's not the only piece of the puzzle. We have that big low, and that big low says, oh, wait a second, just like I want to buy bear traps going higher, right? Why do we buy bear traps going higher? Because we want to what? Avoid buying too high, avoid buying into those highs. The same principle of why we want to buy bear traps in breakouts on the Nasdaq and the S&P is the same principle of why we need to sell, in this case, bull traps above the high. I think that makes sense, right? So those two pieces now are coming together. I call these crown reversal patterns, and that's the way you would sell off the high of that channel. Along with this, obviously, too, if we go higher here, again, get rid of this channel here right now, we know where the market wants to go. It's obvious that we'll call it $70 a barrel, 69.83. If we continue to rotate going higher here, you know the answer to this one, right? You know that trap entry. And I'll tell you, if we're lucky, but this will be difficult. Remember, it's not an overall bull market. This is an overall bear market. So trying to come in and buy that pullback, right? This is the one, well, not the only, but one key difference here between the S&P and NASDAQ and the oil. If we take out these highs right now, that's mission accomplished, right? Remember, it's not a bull market. You'll see in the descriptions, it's a pretty bear market. So me being a buyer now on a pullback is a little bit of a gamble, right? That's a gamble right there. Again, this would be the same game plan we talked about on the S&P and the NASDAQ. On the oil, though, it doesn't make as much sense. What makes a lot more sense here is get into those traps on the way up to the objective, rather than trying to buy this pullback right now. Let some other poor buyers try a couple times, and then you got it. Sell right into their stops for the reversal back down again. That's the game plan I have in my mind right now, going higher. As we're going higher, looking for bear traps, but as we take out some of these key levels, Yeah, no thanks. I'm now going to let some other rookies step in, let them try to buy here and see if we can't use their stops as fuel because, again, range below us, overall bear market. This could easily flesh out into a larger range, and we may simply keep on rotating back and forth as we go. Now, there comes a limit to the point where, should I say this? There comes a point where there could be so much bullishness that we can buy a pullback. So, for example, if we were to pop higher and begin to grind and grind and grind, and this thing starts getting ridiculous and really, really, really rips going higher, okay, now we have enough momentum on our side. We can probably go out, find a larger channel, and we can probably rely, remember, anytime we see a strong move in one direction, we'll probably be able to rely on that deep pullback, trap those bears in, and then get a failure to retest the high. Once we do retest the high, then mission accomplished for the buyers. Then it's one of those 1-2 failures and back down again. So there could be a point where if it does keep aggressively running higher, at some point you have to think there will be enough buyers off the low of that channel to trap in some bears and make some money on it. But again, it needs to push well through this $70 a barrel area. And again, one of my favorite techniques on this is kind of that pop and that grind, as you can see, going higher here. So I'll definitely keep that on my radar here for tomorrow. That covers the move going higher. If we end up going lower, what is my overall direction bias right now? Bearish. It's not a bull market. Again, there could easily be, right, that channel coming down. Now, I like the idea of being a buyer down here because, again, we're sitting at major support with a range above us, but the only way to successfully buy that, because we're so bearish overall, is to use that two tries in the bears. Again, why 2 tries? Because we're so bearish overall. I will gladly buy at support levels below a trading range, but if I'm going against that overall momentum direction, I better be careful. I better wait for the sellers to show them what they're up to and then buy into those stops with a 2-try failure. And as always, like I always remind you guys, if they do hold that pullback and we end up blasting off of that low, remember, keep in mind, didn't do it there, didn't do it there, didn't do it there. They have to hold that pullback. If we end up running lower here overnight, if they hold that pullback and they really rip this thing, like I keep saying, anytime we see a strong move, we expect another leg. Remember, it's not enough to get a strong pullback like this. We see strong pullbacks all the time in range markets. They fail and wind up rotating higher. If they can hold that pullback and blast going lower, that's a breakout. We call these 1, 2, 3 breakout patterns. They're very easy. We now mark off that low. We mark off, I like to look for that big high. I find those prior swings and I grab that first test. It could be a bull trap, like in this example. It could be a buyer failure above the moving average. We'll know more once we get there. But any of the entry patterns you guys are learning in the free trading course. And a really easy trick whenever we have a range breakout is to measure the first leg. We call this the breakout leg in our trade room. The breakout leg is oftentimes the measuring leg. We know that breakouts like to go in 3 legs, right? So 1 leg pulls back, holds, 2nd leg, that's your confirmed breakout, right? I'm not selling that first pullback. Okay, we're going to range above us. We're at support. I'm not going to sell that first pullback. It's not a reliable trade yet. Once they hold it and jump, right, very strong going lower, now we've got 1 leg, 2 leg. The 3rd leg is probably going to be equal to that first leg. First leg equals 3rd leg. Down below us, we've got quite a bit of open space, and you'll see that referenced on that 60-minute chart as well. All right, guys, so first leg, 3rd leg, keep your eyes on that breakout, and we'll see what we get here overnight. Very excited, though, for tomorrow. Tomorrow, again, kind of a wide open day here as we make our way into the FOMC announcement coming on Wednesday. You can imagine a lot of traders are going to try to make some good money tomorrow because we know there'll be a big chunk of the day taken away from us on Wednesday afternoon. All right, wrapping things up tonight, guys. Hope you guys enjoyed the video. It is great to be back here, back in the swing of things on our video newsletter. Don't forget, if you have any questions, if you want all the free course links, the trade room links, if you want any more information about membership or anything we talked about here tonight on the video, grab those links linked up in the description of the YouTube video. If you need any help along the way, don't be afraid to call the office. Send me an email, jump on live chat. The easiest way to get help about anything we talked about tonight is to grab those, is to call the office, right, or use live chat as well. All right, guys, I'm going to wrap things up for now. Hope you enjoyed the video here tonight. Hope you use this knowledge to make some money on Tuesday. In the meantime, have a great rest of your evening. We'll see you guys tomorrow morning, 8 o'clock Eastern time in our members trade room. If not, we'll come back tomorrow night and we'll get ready for FOMC Wednesday. Guys, my name is Joseph. Thank you for watching all the way to the end. Be well. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye-bye for now.